change my screen because, yeah, that's better. All right, guys, so welcome to today's webinar. In today's webinar, we are going to be discussing support and resistance areas. So you guys should be able to see a slide in a second here if I hit the right button. There it goes. Yay. So as I'm sure you guys can all guess, my webinars are not flashy. They're not generally not scripted. I do have a few notes today, but my webinars are kind of like off the cuff, and yeah, we do tend to have some technical difficulties sometimes, but we're all set up now. Everything's good to go. So we're going to be discussing support and resistance areas today, guys. I'm going to be placing support resistance areas on a bunch of charts, and we're going to be talking about support resistance. Is basically just a quick breakdown of what's going to happen today. I'm going to do something because I'm in the mood for it. Might be stupid, might get us sidetracked. If we get sidetracked, I'm just going to disable the chat, but I'm going to keep the chat open for now. Today's webinar has a pretty low attendance, probably because it's a Saturday in summer. It's the first time I've done a webinar on Saturday because it's the only day that suits me because I'm off to Belgium next week. On Monday, I'm off on a 1 week holiday to Belgium to visit my girlfriend's family, in-laws. Point being, I really don't have any time to do this webinar next week. Originally, I wanted to hold it on Wednesday, but that's ended up having to be on Saturday. So yeah, we have a pretty low attendance today for one of my webinars. There's only about 100 people in this room. Normally my webinars get like 300 plus people. So because we have only 100 people here, I'm going to keep the chat open because less chaos, less questions that are off subject. Hopefully just with 100 people in here, we can keep the chat open and not disable it until the question and answers time. We'll see how it goes. If we get too many off question subjects, off subject questions, off question subjects, what does that even mean? Off subject questions, I'll just disable the chat until the end. But I think we'll be fine. So yeah, what are we talking about today? Today we're going to be talking about support and resistance areas. So please do keep questions on subject. Any questions you have should be about support and resistance areas. That is what we're talking about. That's what the question should be about, support and resistance areas. I don't want to talk about, other parts of my strategy because my strategy, it would take several hours to cover it in full. And I can't do a webinar that's 6-7 hours long. So in each webinar, I tackle one aspect of my strategy. Today, it's one of the most popular aspects of my strategy, support and resistance, because people always ask me, how do you place your support resistance areas? And they always want training on placing support resistance areas. So yeah, that's why we're discussing support resistance areas today. So please keep any questions about support resistance areas. I want you guys to do me a big favor. If you see someone who maybe didn't hear this, who comes in late, whatever, asking questions that are off subject, please kindly remind them to keep their questions on support resistance areas, specifically on support resistance areas. I mean, I'm going to be doing that myself, but in case I don't see the question, just kindly remind them, hey, this webinar is about support resistance areas. Nick asked to please keep the questions on subject. So yeah, that would be awesome if you guys could do that. For those of you who are at one of my webinars for the first time, I'm just going to quickly say who I am. My name is Nick Bencino. Nick Bencino Sanfelice, but yeah, I just go by Nick Bencino because it's easier. My name is Nick Bencino. I started trading at the age of 16 in 2003. I started trading with my school. It was the stock market. It was a kind of competition that we did. That was my first taste of trading. I did pretty well. And I kind of I did about 2 years of stock market trading, but it was just like, I got lucky. I'll just tell the truth. I got lucky. I made some money, not a lot, not crazy money, but I made profit on my account, but I got lucky. I didn't know what I was doing. But anyway, Eventually, I got into Forex the way most of us do. I saw ads online for Forex trading, and I kind of switched to Forex, and then I kind of just fell in love. Forex for me was much better than stock market trading. And I've been trading Forex ever since I was 18. I am now 30. I am getting old. I looked in the mirror today and I have white hairs on my head. Anyway, so yeah, I'm 30. I've been trading Forex for quite some time now, 12 years. And I've pretty much always been using the same strategy, or kind of like, it's changed a lot over time, to be fair, but it's the same basic strategy. So support, resistance areas, reversals, price action. So I am a price action trader. I don't use any indicators at all. I don't really need indicators. I don't have anything against indicators. Some people use them that use my strategy. They still use indicators and it works for them. I just personally do not find I need them. I like to keep my trading simple. I like to concentrate just on price action. So my charts are clean, just price action, support, resistance areas, and candles. So yeah, let's before I babble on anymore, let's just get started with this thing. So what is support resistance areas? What are support resistance areas? Support resistance areas are essentially strong groupings of buyers and sellers, which have a strong chance of stalling or reversing price. So a support or resistance area is just an area where there's loads of buyers or loads of sellers. And when price hits that area, it has a strong chance of stalling or reversing price. So they kind of allow you to see ahead of time where buyers or sellers might stall. When you have support resistance areas on your chart, you know, you can see ahead of time what price is potentially going to do when it gets to that area. So like, good use of support resistance allows you to predict what price is going to do next. You know, before price hits an area, when price hits that area, it's very possibly going to stall or reverse. You're not going to be right every time, but it gives you a lot of insight into what price is going to do next. When price approaches an area, it's good to know the areas where price might stall. It's good for targets, it's good for reversals, it's good for continuation trading. I use it mainly for reversals, but it can be used for continuation trading. And yeah, like I said, it's good for targets, just setting your targets slightly before an area of support resistance. That way you exit the trade before that trade meets resistance or support. So yeah, support and resistance allows you to predict with a high degree of accuracy what price will do next. I'm just quickly reading the questions. No questions really. All right, so let's keep going. Support and resistance is kind of one of those things that people look at it and they freak out. They think, oh, this is tough. It's going to be hard to place. Is there an indicator that can do this for me? You know, is there something where I just press this little magic button and all the support resistance areas get drawn on my chart for me and I don't have to do anything? Because it looks intimidating, it looks hard to do, but the truth is support and resistance is pretty easy. Once you get used to placing them, once you practice, it actually becomes very, very easy. I'm going to give you guys a simple, I wouldn't really even call it an exercise, but I'll explain later to you guys how to kind of train yourself on support resistance. They're really, really simple once you get used to them. And it's simple to update them too. So once you place them, you kind of, all you have to do at that point is update them. Unless price moves out of the area, that's when you have to place new ones. It's simple to place, simple to update, and simple to place new ones when needed. The most important thing to remember, or the most important things to remember about support and resistance, the basics. And this is the stuff I want you guys to keep in mind as I'm placing support resistance areas on the charts in the next few minutes. Recent data is the most important. Recent data, and I've said this a lot in my webinars, but it's just one thing that you have to remember with support resistance. Recent data is the most important. Recent data is the most important. You have to keep that in mind because recent data is what I rely on to place my support resistance areas. If I see a kind of medium bounce or even a weak bounce last week, that's more important to me than a strong bounce 6 months ago. Because that recent bounce, it tells me where price is bouncing from now, as opposed to the bounce 6 months ago that tells me where price was bouncing from 6 months ago. If the only data I have is 6 months old, then I will place my support resistance areas based on 6-month-old data. But if I have any recent data, that takes precedence. That's more important. So everything I do today, we're going to be looking at recent data first and the older data after. Thanks, Fab. Patience, guys. We're going to be switching to the charts and placing support resistance areas in a second. I just want to make sure everyone gets the basics. Another basic is to adjust your areas regularly. I used to place my support resistance areas and keep them on my chart for months without changing, but these days I adjust them more regularly. I adjust my support resistance areas every week, so I place them. If I see that price is bouncing a bit higher or a bit lower several times, then I'll adjust them. I'll move them up or down. We'll cover that. We'll cover that in this webinar too. And one of the most important things to note, and this is the important part, and it's the part that a lot of people, they don't listen to it, they don't understand it, and they kind of, I think people don't want to understand it. Support resistance areas are not perfect. But if you understand this, then your confidence in placing support resistance areas is going to skyrocket. No support resistance area is perfect. If I place a support resistance area, just because I've been doing it for years, it doesn't make the support resistance area perfect. It doesn't mean price is going to bounce exactly from that area. It could bounce 10 pips above it, 10 pips below it. It's just an area. It's kind of a rough zone in which buyers and sellers are located. It's a rough zone in which price might reverse. Support resistance areas aren't perfect. So when you're placing your support resistance areas, don't worry about perfection. Don't focus on getting it perfect within 1 pip, 2 pips, 10 pips. It doesn't matter. You can't spend 20 minutes trying to adjust each support resistance area, switching to every time frame and looking at the bounces and seeing exactly where this wick is, where that body is. That's not how you do it. Don't worry about being perfect. You place them kind of roughly where you see support resistance, and that is it. You place them, you leave them there. You can adjust them as time goes on. You can adjust them as price moves into the area and bounces away from it. Then you can adjust it. Then you can pull it down. Then you can pull it up. But when you place them, you just place them as best you can. You place them where you see the support resistance happening, where you see the bounces happening, which we'll discuss in a second. Just remember all the way through this that the two most important points: recent data is the most important, and support and resistance areas are not perfect. Don't try to be perfect when placing them, because no one is. You just you place them as best you can, and then you let price show you where the right support resistance areas are as price reaches those areas. Alrighty. So we've got a lot of chance to place support resistance areas on. I'm going to try and do all of them for you guys today. Can't promise that we're actually going to get through all of them, but I'm going to try and do all of them. I'm going to try. I don't know why it's on the 1 week chart. That's weird. Yeah, like I said, I can't promise we're going to do all these support resistance areas, but that is the goal today. All right. So if you guys have any questions while I'm placing these areas, specific to what I am doing, specific to how I am placing that area, if you have any, I wouldn't call them complaints, but if you have any questions, for example, like why are you placing it there and not there, feel free to ask. I'll try to answer all those questions. But I also want to get through all these, and we don't have that much time. So yeah, we'll just see how it goes. So the first trick when you place support resistance areas. Well, not the first trick. The first step is to go to the daily chart or the 12-hour chart. I use either the daily chart or the 12-hour chart to place my support resistance areas. Doesn't really matter that much. The 12-hour chart just gives you a little bit more information, so you see a little bit more of the bounces. The daily chart gives you less information, so you kind of see the major bounces. I tend to focus on the daily chart most times, but I do switch down to some of the lower time frames sometimes, such as the 12-hour chart. I generally do not go lower than the 12-hour chart. So what you want to focus on is 12-hour and daily. Those two time frames are what you want to focus on for support resistance areas. We're going to be looking at the daily right now, but we might switch down to the 12-hour if I feel it's needed. The first step, the most important step, when you open up your chart, when you want to place support resistance areas, is you place the obvious ones. Usually those ones are the highest ones, but it's not always. So you just place the obvious ones. So where are the obvious support resistance areas here? This one here is pretty obvious. That one there. Why is that one obvious? Well, we have an extremely strong bounce there. Very, very strong bounce. Price, by the way, guys, oops, I accidentally placed a second one and a third one. I need to do that. Is the chart large enough for you guys? Do that too. All right, cool. So the first thing you want to do is you want to place your obvious ones, the big ones. They're usually the outer ones, but not always. But see, that is a big one because price kind of bounced away from there significantly, and it has not been up there since. So that is a very significant level. That is really high up there. And I'm placing it based on just one bounce, but that's fine because it's such an extreme bounce. Price pushed up and then it's gone down and it hasn't gone back up. That is a big bounce. It is a huge bounce, and likely if we go back, we're going to see, if we go back, we'll see some extra data there confirming this, several bounces through here, but I don't really need those bounces to place the support resistance area. I'm not too bothered with those bounces. That's old data. This is the freshest data we have from this area here, from like up in this zone. This bounce is the freshest data we have, and it's a big bounce. It's a very big bounce. So that's an obvious one. You place that one first step. Then I'll place another obvious one. I'm going to place one here. That's a really obvious one because again, we're placing support resistance areas based on bounces. What you look for first is the bounces, where price bounced from, not the wicks, the bounces of the bodies. So 1, 2, 3, 4 bounces. Then if you look here too, you got another bounce there. And you've got another bounce here. So that's 4 bounces right there. So those are the obvious ones. These ones are easy. I'm going to place another one down here because again, obvious and easy. It's not as obvious as the other ones, but see, we got that huge bounce from Brexit. And it done a double bounce there and then it came back up. So that's a pretty extreme one, pretty big. Someone's asking why not the wicks. That is a good question. That is a very good question. I don't use the wicks personally because I don't find that data to be as important. I trade reversals from these support resistance areas. So I trade indecision or reversal candles for some who know that term better. Or dojis or I don't know, pin bars, whatever you want to call them. I trade those patterns when they form on top of a support resistance area. So if I have my support resistance areas down at the extremes, then I'm never really going to get indecision forming on those areas. If I have it where the bodies form, where the candles bodies form, where price actually spends its time being stuck, that's when you're going to get those patterns that I look for forming on those areas. I feel that support resistance is more importantly placed at areas where price struggles to get through for a long time, where price stalls. I like to put my support resistance areas where price stalls, not at where price spends about 5 seconds before coming back up. Those extremes are not as important to me. What's important is price spends 6 hours stuck in this area, because that tells me something. That tells me price is going to spend hours stuck there because there's buyers. If it comes down to this area and price spends hours stuck there, it's telling me that buyers are fighting back there, and that's where they're going to push up. That's where they're going to cause the reversal from. If price moves down to here for 5 seconds and then rushes away, that could be because of news, that could be because of anything. And is price going to reach down there again anytime soon? Possibly, but maybe not. But at those areas where price struggles, that's where I like to place my support resistance. Yeah, so I hope that answers your question. We've placed another one here down here because of those two body bounces there. So these so far are obvious ones. I think we could probably do another obvious one here. Might not be as obvious, but it's kind of an obvious one. Like, we got that Brexit bounce. That one's not that important, that Brexit bounce, because it was caused by news, by Brexit. But when you get something like this, such an extreme event, it can actually create new support resistance areas. So I don't mind placing it based on that bounce. But then we also have a bounce after that. And if you look back, you also do get bounces before that here. So this wasn't necessarily created by Brexit. It was maybe strengthened by Brexit. But price was probably going to get stuck here before Brexit anyway. It just happened that Brexit triggered at the time that price was stuck there and it pushed down. So basically what we have here is a lot of obvious support resistance areas. This chart was probably a bad example to start with. I don't see much else we can place here, to be honest. I think that's all the support resistance areas we can place. There's no non-obvious ones. All the support resistance areas here are the obvious ones to place. They're quite clear. But I'm sure we're going to get to a chart that's a little bit tougher to get a good support resistance area on there. But yeah, those are my support resistance areas for AUD JPY. Can maybe, no, I'm not going to do any besides this one. We're going to stick to these ones because we got so many pairs to go through. Someone else asking about wicks not being important, so why not use line charts? Wicks aren't the most important thing. They're not what I look for mainly, but if I've got wicks lining up with the bodies, then I still consider that somewhat important. So in this case, we've got the bodies forming along here, but we've also got a wick bounce there. And we've got two wick bounces here. I'd rather see that data than hide it. Most of my support resistance areas, you get wick and body bounces from them. So switching to a line chart would just give me too little information. Someone's asking, but these are just lines, not areas. Support resistance areas are areas of support resistance. They're not just lines. You can't really have just a simple line of support resistance. Support resistance is always defined as an area. I like to place these little blue shaded areas around mine, but they don't need to be there. I just like to place them because it just looks better to me. It's just a visual thing. I just like it. It looks nicer. A lot of people do not do this because you don't really need the shaded areas around it. And the shaded areas are not a specific distance around it. They're not like 5 or 10 pips to either side. They're just, I just place them so they look nice. Most people who trade my strategy, most people in the advanced course, in Forex Mastermind, they don't use these shaded areas. They just have them as lines. And they have them as lines, but they recognize that price can bounce anywhere from from that line and around that line. So you don't really need these shaded areas. They're not important. I just like it because it looks nicer. Okay, let's do some AUD New Zealand support resistance areas. We'll throw these up real quick because they look pretty obvious too. All right, so we got. Okay, so this is a good example of a support resistance area where you go with the most recent data. So I could put the area up here, right? But I could also put it down here because that's the most recent bounce. So which one do I side with? Do I side with that bounce there, or do I go with this bounce here? Well, I'd prefer to go with this bounce here, or at least like somewhere like there, just a little bit above that bounce, so it kind of covers both. Because it's an area, you're kind of covering both. It makes more sense to have it here because this is the most recent bounce. That's where the recent bounce happened. Now, I'm going to switch back up to the daily, by the way. Another obvious one is okay, that's weird. Down here, that's a pretty obvious level. Price has bounced from there this week. It was a pretty strong bounce. It's moved away from that level. You can play support resistance areas based on as little as one bounce. This does have some bounces in the past, but you can place them on as little as one bounce. And I know a lot of you guys are going to say, well, that's kind of crazy. Why are you placing it based just on one bounce? One bounce doesn't mean anything. But the thing I always say to that is you're placing the support resistance area based on a single bounce right now. So when price comes back to this area, like it looks like it might be doing now, when price comes back to this area, if it pushes straight through the area, then I could say, okay, I'm going to ignore this. I'm going to move this. This is no longer a valid support resistance area. I placed it based on one bounce, and now price just pushed straight through. But if price comes down to this area and then it forms indecision, price gets stuck here, and then it moves away, or even if it just gets stuck here for a long time before continuing down, that is the confirmation for this one bounce. That is the second bounce. So that's why I place my support resistance areas based, why I'm happy to place support resistance areas based only on one bounce. I place them based on the most extreme bounce, the most extreme recent bounce. Then if price doesn't back me up when it pushes back down, then I can adjust it. Okay, so we got an extreme one there that looks like a pretty solid bounce, so I'm going to place it there. I'm placing it here because it's the most recent bounce, so price bounced from there recently and it moved away quite significantly. Technically speaking, I could place it higher. I could place it about here because price stalled there for quite some time. But you know what? Support resistance areas, they don't have to be perfect. I'm going to place it here. If price comes down to here now, like this week or this coming week, and it bounces from this level, then I could say, okay, I'll adjust my support resistance area and pull it up a little bit. I'll pull it up to here. But for now, price bounced from there. It was a pretty strong bounce. I'll place it down here and we'll just see how it goes. That's the most liberating thing about placing support resistance areas the way I do now. It's kind of changed a lot over the last few years, but now I place them quite freely, and I just let price tell me if that's a good support resistance area. I just let price, show me, hey, that's a good support resistance area because it bounces from it. And then if it doesn't bounce from it, then I can adjust it. So placing support resistance areas based on one bounce is not a bad thing. You place them and you let price confirm them for you when price moves back into that area. And another very important thing to note, this is something I consider when I'm entering a trade. So let's say, because I placed this support resistance area based on a single bounce here, if price pushes down to this area and indecision forms, that is the confirmation I need to tell me that this support resistance area is good. But I am not going to forget the fact that I've placed this support resistance area based on a single bounce. That's still important information because I'm entering a trade here. If I'm entering a trade here, you know, I want as much information about this trade as possible. So as part of my analysis into this trade, into this potential setup, that is going to be a factor I consider. One of the factors I consider is going to be that this support resistance area only has a single bounce. So if the trade is kind of like, it's not a great trade setup, so it looks kind of okay, but it's not perfect, it's not a good trade setup, then you couple that with the fact that the support resistance area only has one bounce, then I would say, okay, I'm probably not going to enter this trade. But if the trade setup is awesome, it's just like a picture perfect trade setup following my strategy, and then, you know, there's the fact that it's only had one bounce from that level previously, I'll still enter the trade because everything else is perfect. It's had a strong bounce recently, and it appears to be having a strong bounce now, which is why I'm entering. So it is something I do factor in when I'm considering taking a trade. I do remember that this support resistance area only has one bounce, and that might mean that it's not the strongest of support resistance areas, and it might affect my overall trade. So yeah, keep that in mind. It is part of my overall trade analysis. Okay, so next support resistance area. See, that bounce is kind of throwing me off there. You know what? I'm going to pull this one up to here. I'm going to stick this one. This is like a little trick I do sometimes. Because it's an area of support resistance, and I'll place the blue shaded area around this. Because if it's an area of support resistance, a little trick I use is to kind of look at two bounces and then split the difference. So, you know, I could place a line here, and I could place a second line around about here. And why would I be able to do that? Because we have a strong bounce there, a strong bounce here, a strong bounce here. But then more recently, price pushed through that area and then bounced from here several times. So what do I do in a scenario like this? Do I pick this one because it has more recent data, or do I pick this one because it has stronger bounces? You know, like I said at the start, recent data is most important. But what do you do when the recent data is weak? I mean, those bounces are not strong at all. They're not even bounces, really. Price just came back up, tested this level and pushed back down. Then this one, I guess you could call it a bounce, but that could be news related. It could be anything. So what do you do when your recent data is very, very weak, and then very close to it, you have data that shows strong bounces, major bounces? I just place both support resistance areas, and then I split the difference. So, damn it, I didn't mean to do that. So I place both of them, and then I place one in between, bam, delete those two. And remember, they're areas of support resistance, they're not simply lines. TradingView changed a bit about how it works, and I'm still used to the old way, so I keep accidentally deleting things. So there you go. Now we have that. That's just a normal area of support resistance. When you place the blue shaded area around it, you kind of start to see more how this kind of makes sense, splitting the difference. Let's make it just a touch bigger. Because now we can see more clearly, we see visually that these bounces are accounted for with this one in the center here, and so are these bounces. That's why I like to have this blue shaded area around my area, my support resistance line. It just kind of makes it clearer what's going on there. It just looks better to me. So yeah, that's I guess that's a little tip, splitting the difference between two very, very close support resistance areas. Ah, damn it. Okay, so we've got a recent bounce here. It's not a very strong bounce, but it's an active bounce. Price has just bounced away from there. And then we've also got a smaller bounce here. After price broke through, and it struggled to break through for a little bit. After it broke through, came back up and it tested this level. Then it came back up again and we got some wick bounces. Like I said, wick bounces aren't the most important. These bounces here, they're not the most important, but you know, they're not something that you should completely ignore. We've also got a bounce there. This isn't the strongest level, but like I said at the start, support resistance areas don't need to be perfect. You place them, price can confirm if it's a good support resistance area. So when price pushes back up to here, if it cuts straight through it, then we might move this support resistance area. If it bounces away from it, then that just confirms that it was a good placement from the start, and you can keep that area. So yeah, that bounce looks good, so I want to place something there and see if it matches up to anything more recent. Yeah, it does. It has a wick bounce here. Something like that would work. You know, this pair is a bit harder to place support resistance on, but see, we got a bounce there, we got a bounce here, and we got price stalling briefly before pushing up here. You know, this one might be a bit clearer on the 12-hour. Yeah, see, when we switch to the 12-hour, it makes it clearer why there's a support resistance area here. This is what's good about the 12-hour. You know, the daily, it condenses the information, and that's good sometimes, but it kind of makes it harder to see. See this specific zone here. You know, you can place a support resistance area here, but it's kind of hard to tell how good that bounce is. Is that a good, strong bounce? But then when you switch to the 12-hour, this same bounce, it looks a lot stronger. Visually, you can kind of tell that price actually stalled here. That's a bit wide. So yeah, that looks decent to me. So that's the use of the 12-hour. 12-hour just gives you a little bit more information, a little bit more data, and more data is often a good thing. We will be doing questions and answers after the guys, so keep that in mind. Yeah, I'm going to place one here. So why am I placing one here? It's quite clear that price formed along here, kind of stalled for quite some time. So yeah, it's pretty clear that we have support resistance here. I mean, you can't really argue it. It came here and it just bounced from it a bunch of times before pushing back up. Let's see if we have anything in the past. Oh, okay. See that bounce in the past? You know, we're going back to November of last year, but it's still a pretty significant bounce in the past. And then it has more recent bounce there, so that's an obvious one. I think that's enough support resistance areas for this pair. We placed even a bit too many. It was just a bit of a tougher pair to place support resistance on. Tougher than the first example where you do JPY, so I wanted to focus on it a little bit. All right, next. Perhaps I should re-enable the chat and just ask you guys for some pairs that you want to see support resistance areas on. Let's just do AUD USD real quick, and then I'll unmute the chat for a little bit and just ask for pairs. So get ready to tell me any pairs you want after we do this example. All right, so I'm going to place a support resistance area there. Remember, first step is to place the most obvious ones. That's an obvious one. Why is that an obvious one? Because price came up to here and then pushed down. It hasn't been back there since. Very, very strong bounce. Even though it's a single bounce, it's more than enough information to place a support resistance area based on. Let's do another very quick, obvious one here. That is another very strong bounce, a very obvious bounce. You know, price came down to here, and bam, has moved away. Hasn't been able to get back there since. It's a strong bounce. So those two, yeah, they're pretty good so far. Now we'll go place the ones kind of in between, the ones that are a bit harder to see at first glance. Yeah. So I'm placing this one. This one's a little more hidden, but you kind of see a bounce there, a recent bounce here, very recent. Price stalled for a little bit through there, and you see a bounce there, a bounce there, and you see price came up, back down and bounced away. And you see on this strong move down, see how price stalled there for 2 candles? That's also an indication of the support resistance here, because price is stalling there for a little bit. It's not an indication I would use on its own, but when you couple that with the other bounces, then yeah, it's clear that there's some support resistance there. Alright, I'm placing one there. That one's actually pretty obvious. Got a recent bounce there. We've got a wick bounce there. That's Brexit. Got a bounce as price came back up. You got a bounce there and a bounce there, so that's a pretty obvious one. Yeah, we can place that one. Let's go down to the 12-hour. Yeah, maybe one here would be good. See that bounce there, and then another bounce there, and price stalled on its way down, and then see this small bounce here, this kind of continuation type bounce. Yeah. No, and it's got a bounce in the past here. Yeah, I thought that would line up. Yeah, okay. Done. AUD/USD. Got some solid support resistance areas for this pair. Let's place the shaded areas around it. And again, you'll notice that my shaded areas aren't a specific distance. I just place them because it makes it look better to me. It's just a visual thing. I prefer the look of a support resistance area that looks like an actual area instead of just a solid line. That's your support resistance areas for AUD/USD. You can see that this is quite easy, and if I wasn't talking you guys through this, I'd be doing this a whole lot quicker. I'd have already had all of these support resistance areas done by now. It doesn't take very long to do it all. I'm going to unmute the chat real quick, and then you guys can tell me, because we're obviously not going to get through all these pairs. So just give me some suggestions for the any pairs you want me to do support resistance on. It'd be easier if you give me suggestions of the pairs on this list here, and we can do support resistance areas on those pairs. And then, yeah, wherever we get the most suggestions, I'll do support resistance for those. Two for USD/JPY. Okay, let's drag that to the top then. Euro/USD, there's loads of Euro/USD requests, so we'll do some Euro/USD. And I saw 2 USD CAD requests, so we'll do some USD CAD. USD CAD, USD CHF, USD CAD. Wow, lots of people want USD CAD. Let's move that to the top of the list then. All right. Let's leave it at that for now. Okay, someone's desperately wanting New Zealand CAD. I don't have that here, so let's bring it up and Why do you want New Zealand CAD so bad, man? Are you in a trade or something? Sadly, we can't do all of them. We'll do New Zealand CAD. I'll make sure we do New Zealand CAD. Don't worry. All right. USD CAD seems to be a popular one, though. Yeah, I think we're all good. Yeah, we've got enough pairs, guys. Let's stick to what we got for now, and then we'll add more if we have time for them. But I doubt we're gonna have time for them. I'm gonna try speed up and do these a little bit quicker though. I'm gonna try to do kind of like some quick placements. That way we can kind of get through as many as possible. So yeah, let's go. Let's do some USD CAD since that seemed popular. I'm gonna place one here because it's a huge bounce. It's a very obvious bounce too. I'm gonna place one here because it's got a very recent bounce. See this recent bounce here? That also lines up roughly with that bounce there. Also lines up with that wick bounce there. So that's a pretty strong, you know, you got 3 bounces roughly from that area. It's not perfect. Damn it. It's not perfect, but it's close enough. Now what does that look like there? Sometimes you just need to kind of place a line to kind of get an idea of if price is bouncing from there. Maybe not. Let's go down to 12 hour. I need a little bit more data with this pair. The data we have is not enough. A little bit more data will kind of clear things up for us a little bit. Yeah, I'm going to place a support resistance area roughly here. Oh, it looks like the support resistance area would be better placed down here, but the most recent bounce is there. So yeah, I'm going to place it there. We could split the difference too and place it here. Yeah, we'll do that. We'll do that split the difference trick I was talking about earlier, because we could place one roughly here and we could place one roughly here. So I'm just going to place it in between those two, and that will cover a lot of these bounces. All right, so we have a kind of obvious bounce there. That's a strong bounce. We have bam, strong bounce, and then a wick bounce there, and then kind of a bounce there too. So yeah, again, that's kind of obvious. We can't really get anything lower than that on our USD CAD. Okay, it's a bit tougher placing support resistance areas here because of how quickly it rose and fell. What I'm going to do is, yeah, place one based around about there based on those bounces. I'll show you guys when I place it. Yeah, this one's a bit, it's not the best support resistance area, but if you look closely, you see a bounce there, you see some wick bounces there, you see a bounce here, and then you see some wick bounces there. So it's not the best, but it's all the data we have, so I'm going to place it based on that data. So that's some rough support resistance areas for USD CAD. It's they'll start to look a little better when I finish placing these shaded areas. Maybe draw them a bit wider. There you go, support resistance areas for USD CAD. Ooh, Stuart, that is a good question. Stuart is asking how might support resistance areas change in a less volatile market. That is actually a very good question. In a less volatile market, you'll find your support resistance areas get closer together. and you'll find that it might be easier to go to the 12-hour and 8-hour to place your support resistance areas instead of the 12-hour and daily. 12-hour and daily, that combination to place support resistance areas is good for volatile markets, which we're in right now. But if price really slows down, like really slow, which 2014 is a good example of that. Summer 2014, if I remember correctly, was very slow. That's when you want to start placing your support resistance areas based on the 12-hour and 8-hour time frame, because then you'll get them a little bit closer together. That little bit more data kind of draws all your support resistance areas closer together, and that makes more sense in a slow moving market, because you're not going to get those moves that take you up to that other support resistance area. That is a good question. These support resistance areas that we place on the daily and the 12-hour, they can be used on all time frames. Let's do some USD JPY support resistance areas real quick, because I don't want to. I want to cover all the pairs that people ask for. Okay, so that is a solid extreme bounce from there after Brexit. So I'm going to place one there. Yeah, I'm going to place one here. Why am I placing it there? Pretty simple to see. Bam, strong bounce there. Bounced before it came pushed through, came back up and bounced, and then it bounced again. So yeah, that's kind of an obvious one there. Damn it. Okay. No, what I want to do, yeah, is pull that down a bit. I'm going to switch to the 12-hour for this one. It just seems like the bounces are a bit too extreme. I just want a little bit more data for this pair. And if you don't have access to 12-hour charts, you just find a trading platform that does. Okay, I'm going to place one there based on those two bounces. They're very strong bounces. You got bam, bounce there, and a bounce there. Okay, so let's place one up here. Yeah, based on that bounce, but it also kind of lines up with those bounces roughly. Yeah, that one's fine. That one, oh, there's a bounce there though. Let's see. Yeah, I'm gonna place one there to cover this bounce here. Kind of like a double bounce. Actually, I guess a continuation bounce there too. So yeah, let's throw one there. What happened there? When was the last time price was down here? 2014, that's not that long ago. Yeah, all right. I'm going to split the difference again. So I could place one here and I could place one there. So what I'm going to do is I'm going to split the difference, place it in between those two, and then call this kind of rough area support resistance, because price kind of bounced from here and then on its way down it kind of bounced from there. So, you know, this one is probably not the strongest area support resistance. Price cut through it twice just now and there, but see how it cut through it here, like just on Friday. See that lower wick there? That tells us that price possibly did bounce from this level. So, you know, this is not a criteria for placing, but I just want to show you guys what maybe happened. I'm not sure. Yeah, so if you drop low enough, you see that you did get price stalling on top of this area on the 4-hour time frame. You know, that's not extremely significant, and I'm not going to place it based on that. But it just gives you the idea that price did actually stall here for 3 candles. In fact, you know, the first candle, 4-hour candle came here, bam, pushed away. The second candle kind of like danced around in this area. The third candle, it stalled there and the buyers got stuck there. So that's 12 hours. 12 hours of price kind of being stuck in this area. So yeah, that's somewhat significant. My point being, like, it's not like price cut straight through. It's not like price just said, okay, this support resistance area doesn't exist, I'm just going to cut straight through. It didn't. It looks like it did just because of how these candles closed. But when you look closer, you do see that price did kind of stall here. It did have some respect for that support area. So yeah, I'm going to place it here, split the difference between these two, and that will kind of account for both these bounces, and that will give us a nice area of support. Okay, so yeah, that's support resistance areas for USD CAD dealt with. No, sorry, that's USD JPY. What am I talking about? USD CAD was the previous one. I told you guys at the start of this webinar, I'm getting white hairs, I'm getting old, I'm getting really old. I just called USD JPY USD CAD. No, I didn't mean to do that. Ratchet is asking a good question. Okay, the question is, how many pips between support resistance areas on the daily do you consider a minimum to be useful for trading? When do you decide not to use large areas and add SR line instead? I never add SR lines. I never use just lines. You can't use just lines. I always just use areas. And there is no minimum distance between support resistance areas. Sometimes support resistance can be very close together. Sometimes support resistance is going to be this close together. And generally speaking, that just means I'm not going to take a trade between those two areas. There is no minimum distance. You can't just look at it and say, oh, that's a bit too close together, so I'm not going to place the line there. I'm just going to imagine that it's not there. I'm going to pretend it's not there and hope that price doesn't bounce away from that area. If there's a support resistance area there, you place it. Sometimes they're going to be too close together, and if that's the case, you just do not trade in that area. Euro USD is messy. I forgot about how messy Euro USD has been lately. Okay. We haven't done USD CHF. We don't have much time left. I'm going to move New Zealand CAD up a little bit. Okay. Let's speak through some support resistance areas for Euro USD. I'm going to place one there because of the major bounce. I'm going to place one here because of the major bounces. There's two major bounces there. One seems to have been caused by Brexit, this one I believe, obviously, but there was a bounce before that, and there was kind of a very messy bounce before that. Let's go back up to the daily, by the way. Yeah, that looks pretty decent. Damn it. All right. See, there's a bounce there. Two bounces here. So yeah, that's also significant. I'm going to place one there. Now I want to place it there because of this recent bounce, but I don't know. There's not much supporting it really. How about on the 12 hour? Yeah, okay, it kind of looks better on the 12 hour. You got that kind of price getting stuck through here. Got several wick bounces there, body bounces there. Price getting stuck on the way down. Yeah, and it formed along there. Yeah, okay. We'll place that one. I'm not even sure if we need a support resistance area between here. I guess we could probably slot one in roughly there. Yeah, I'm going to place a support resistance area here. It doesn't look like a very strong support resistance area. But if you look back at some of the most recent bounces, so the recent ones being here, and here, and here, and there, it kind of becomes clear that there is some support resistance here. There are a few bounces from here too, but these are kind of getting older. They're from February, so yeah, it doesn't look like these bounces here have been respected very well recently. It looks like they've become kind of these minor areas of support resistance. I'm going to stick with the ones that show more recent strong bounces. But you know, we'll see what happens when price pushes back up into this area. That might change with time. All right. All right, let's quickly do New Zealand CAD because someone was desperate to see New Zealand CAD. If price has broken a support resistance, so this is a question. If price has broken a support resistance area, is that level valid for future analysis? Yeah. Support resistance areas stay valid. You know, just because it's been broken, it doesn't mean it's no longer support or resistance. For example, a good example would be this area here. So this area here was valid from this bounce, probably before that, but you get several bounces from it. Price stalled, pushed through, so it broke through, then it came back up and it kind of bounced away from it again. So even though it was broken here, that didn't make a difference. Price still respected that area later. And that's just one example. There's like tons of examples of this. Was this one? No, that one was placed based on that. Okay, USD CAD might not be the best example. I'm just trying to find a good example for you. All right, here's a good one. Let's place the shaded areas around, just to make it easier to visualize. Okay, so here's a pretty decent example. So this this area acted as support here twice, possibly more. Yeah, it acted as support several times. Price broke through it. That did not make this area invalid. This area was still valid. It's still a useful support resistance area. So after it breaks through, this area becomes resistance. When price was above it, this area was support, and it acted as support. It pushed price back. It pushed price back right there. But after price broke, this area then became resistance. See price trying to get back up through it? Can't. It has several bounces. That tells us that this area is still valid. A huge Brexit-based bounce there, and then another bounce here. So this area does not lose validity because price breaks through it. Let's do New Zealand CAD and then I'll take a look at the other questions. I just want to get New Zealand CAD done because someone really wanted it. I'll place one there, I'm going to place one here. This is not the easiest pair because price is just pushed up into this area. Did you pick this pair to give me a challenge? I think you may have. I am up to the challenge. I need to go back to this data here to place this one. It's early 2016, but it's hard because price pushed away from this area for quite some time and then it came back up to it. But when it's come back up to it, you can see, especially on the daily, it hasn't had many bounces. It kind of like just piled straight through, except for that part obviously, and then it came straight back down. So it's hard to get good support resistance areas on here. So in a case like this, you might have to go back a little bit, and dropping down to the 12-hour time frame is a good idea because it gives you that little bit more data, so you kind of see where price is bouncing from more clearly. And pulling back a little bit kind of gives you a little bit more information too. Yeah, so that looks about right to me. I mean, it's not perfect, but no, I'm gonna pull that back up. It's the best we can do with this little data. Placing them down here would be a tad easier though. Yeah, something like that. All right, those are the support resistance areas for New Zealand CAD. Guys, I think I've placed as many support resistance areas as we can do in today's webinar, because we're already at 1 hour and 11 minutes and we haven't done questions and answers yet, not properly anyway. So a good way to learn to place support resistance areas is to place them every day. So basically what you want to do is you want to open up a ton of pairs. So let's say you've got, see, this many pairs. You could even add more pairs. This is a lot of pairs, and do 1 pair a day. So Monday, Tuesday, Wednesday, Thursday, Friday, you place your support resistance areas. Maybe even do 2 pairs per day. You know, however much you can do in let's say a 30-minute period. You place those pairs. You place support resistance on those pairs. You don't want to do too many because you don't want to run out of pairs to place support resistance on. So like do 2 a day, 1 a day, maybe 3 a day, depending. And once you've gone through and placed your support resistance areas on 30 or 40 pairs, then you can start from the start again. By then, you know, you're like 2 weeks, 3 weeks in. Then you can kind of like just go back to your original ones and you could delete them and you could start over. You can see what information, because you're going to have new data by that point. You're going to have 3 weeks of new data to place your support resistance areas based on. A lot of pairs are going to have moved out from the area they were in. So for example, this pair might move up to here, and then you've got to place whole new support resistance area up in this area. Or it might have pushed down to here, then you have to place areas down here. So it's just about practicing every day. So every day you take 1, 2, 3 pairs, however much you think you can handle in a 30-minute period, and you place your support resistance areas, and then you trade from those areas. You know, if you do this daily, you're going to learn to do it, and you're going to get comfortable placing your support resistance areas. And not only that, you're going to start trusting your support resistance areas. And that's the important point. Trusting your own support resistance areas when you place them, trusting that they're actually strong enough to take trades from.